Hello everyone, and welcome to today's Forex webinar. In fact, it's the last one of the year. I can't believe it. It's the end of 2018, and we're going to be back in 2019. So thank you so much for taking the time out to come and join us. Lots and lots and lots of things happening and been happening and are going to happen. So I know we've said it before, David has said it as well. It really is just a fantastic time to be a trader. It's always a great time to be a trader, but at the moment it's even more fantastic than usual. So thank you so much, as I said, for coming along. But before we start, as usual, can I just draw your attention to the disclaimer that you should be able to see on your screen? And as you know, this can be a very risky business. So please, please, please don't ever think of using money that you cannot afford to lose. Brilliant. I'm just going to, in fact, let me just pass over to David, because I always rattle on first and he never gets the chance to say hi. So my New Year's resolution is to give him a bit of a say at the beginning. So I'm going to pass over to David.
There we go, as Anna's moving her screen across, which you should be able to see now. Very warm welcome to you wherever you are in the world, whether it's certainly good morning here, but it might be in the afternoon or middle of the night where you are. So a very warm welcome from both of us. If this is the first time you've come along to one of these sessions, I'm happy to answer any questions you have. We'll either do that in the chat box if it's short questions, or if they're longer questions, then we will answer them on air for you. Primarily focus on the MT5 platform on Anna's screens, but I've got the NinjaTrader platform running on mine, and we're just keeping an eye on everything. And of course, much of the discussion this morning will no doubt be around the dollar, but more of that in a moment. I'm just going to pass back to Anna, and we will get going.
For just putting the books up is really, I know we have a lot of attendees who are already readers and users of volume price analysis, but in case you're not and you want to know a little bit more about it, this is all the books that cover the different aspects of VPA, the approach to the markets, in particular to forex trading, where we look at a 3D approach, where we look at related markets, the fundamentals, and obviously the technical, which is, as I said, the volume price analysis. And just to let you know that the books have now been bundled, as you can see on Amazon. They're available in box sets, and I think the best seller at the moment is actually the complete forex trading library. And I just looked at my Twitter feed this morning, and it's really lovely to have some feedback from traders saying just how much they appreciate VPA has been doing for them in their various trades, both for intraday trading, short-term trading, and even investments. Really, the one that's really seems to have been caught on is a kind of looking at volume anomalies, and using those to judge whether the price, what you see on the screen, is genuine or not, because I think that really does sum up VPA. It gives you that insight that price alone can't give you. Gives you the insight and looking at a price move to tell you whether it is genuine or not. And because life is uncertain, as we all know, life generally, this environment is even more uncertain, if that were possible. So if we can take away some of that emotional sting that happens when we are in an uncertain environment, and we can stop the triggering of our amygdala. Did you pronounce it amygdala, David? Of the amygdala, which is constantly on alert for threats and dangers. As you know, it is there to protect us. The brain is there to protect us. At least the amygdala is. It's responsible for triggering fight, flight, or freeze, and it's something that we talk about very much in the Forex program, and really just how important the psychological aspect of trading is. And as I said, and it really all comes down to this uncertainty. We are in an uncertain environment. As I said, life is uncertain anyway, but we kind of smooth it out. We can make things as reasonably predictable. We know we're going to get up in the morning. We know what our commute is going to be. Life can be, we have a certain degree of control over our lives, not 100%. Then we come into trading where we have no control over anything, and we have to make a judgment call against, as I said, a completely uncertain environment. Now, David said it's all been about the Fed, but before we forget, I had a quick look on Forex Factory, and I hope you have too. We also have the BOE today. It's kind of taken second billing, if you like, to the Federal Reserve. And what I want to start with is very quickly here on the dollar index, which I have the Dixie here. Now you'll also see, as you can see the volumes that are reported under here, you see the volumes are less than previous. Now we also have to remember with volume is that it is also seasonal, and so you have to factor that in as well. It doesn't invalidate VPA, but you just have to remember that the time that we are actually trading from a seasonal perspective, but also the time zone. We are coming into a time zone now where there is very deep liquidity, and obviously when New York joins, there will be even more liquidity. But that doesn't invalidate looking at volume to help us authenticate a move or not. Now, with the Fed yesterday, as we can see here, yesterday's candle, pre-Fed announcement, it had been falling quite nicely. Stock markets indices were rising nicely because the anticipation was, given all the background to the slowing of the economic data, the problems with China, etc., the market participants had kind of taken a kind of view, rightly or wrongly, that maybe the Fed wasn't going to be quite as hawkish as as they would have been. Given, as I said, based on what they had gone before. And also you have to remember that certain members of the Fed had also kind of hinted that they were going to be a little bit more accommodating in what they were planning to do next year. But in fact, I wouldn't say the opposite happened, but Powell made some comments that basically the interest rate hikes are kind of not baked into 2019, but they haven't been discarded completely. And part of the reason for that is the Fed has models, they use data. They're almost like a systematic trader. You will know as a trader, one of the decisions you have to make is, are you going to be a discretionary trader? Are you going to be a systematic trader? A systematic trader takes all the information on board and has a preset set of steps that he will take regardless. So even if some of the data that he sees doesn't quite fit in with the model, but because the checklist is set up in such a way, he has to take the trade. There's no, otherwise you're not a systematic trader. A discretionary trader, of which if you use VPA, it is very much a discretionary based system. It is very much discretionary in approach, even though it has a kind of system within it. You can look at a setup and you can say, yeah, the setup looks good and it looks like it's good, but actually something comes along and maybe says, do you know what, that really, it could be a piece of fundamental news, it could be political, it could be anything, any element which you think might disrupt that setup. You then have the prerogative to step back and say, no, I'm not taking it. As a systematic trader, you can't. So in a way, for the Fed, I think they are kind of almost, they're in a straitjacket. They're a prisoner of their own dot plot data, etc. So now what's happened today is I think the market has kind of taken the view that, yeah, they may say that, but actually they're going to be taken over by events and they're going to have to row back whether they like it or not. So we've seen a sell-off in the dollar, and we've also seen a nice move up in the euro dollar, haven't we, David? Can I move over to you on that one, and you can, because you've been following that. Then I want to just cover, I've had some queries about distribution and accumulation. Just want to clarify what we mean by those two important concepts in volume price analysis. I also want to have a look at what we've been following over the last 2 or 3 sessions, particularly the New Zealand Canadian, which has finally kind of rolled over from a sort of a kind of distribution that we've seen on the daily chart, and also just keep track on some pairs that I was in earlier on in the month and just see how they have fared subsequently. So I'm just going to pass over to David, as I said, because he's been looking at euro dollar.
Just going to switch screens, just changing over to Ninja. It should be coming up any minute now. Hopefully you can see that. I'm just peering around the corner at Anna. Can you see my screen, darling? Yeah. Okay, brilliant. As Anna said, I've got this on the euro dollar, which I've had since we got up early doors this morning. And what we're looking at here is a multi. I'm just going to switch off for a moment. Bear with me. Yeah. Yeah. Don't worry. Sorry, just something I need to touch on as well. Basically, I've got multi-time frames here. I've got the 5-minute, the 10-minute, and the 15-minute, and then down at the bottom I've got the 30-minute. I've got the 60-minute over here on the right-hand side, and then in the center of it all I've also got the Renko. Because as we've said many times before, using a non-time-based chart, and particularly the Renko, as a blend of smoothing out the price action and just helping to, as I say, smooth out those areas where we get pause points, we get minor reversals. It really just helps to calm the emotion of the spiky nature of price action, not necessarily through the prism of candles, but just purely through those phases of price action where we move into congestion and then continue higher or continue lower in the longer term trend, whatever the longer term trend may be. Multi-time frame analysis is just an essential building block of trading. It is one of the fundamental, excuse the pun, but it is one of the fundamental building blocks of trading. Because whenever you look at a different time frame, whatever it may be, and whatever your chosen time horizon may be, you will get some nugget of information, some piece of information that helps to give you a heads up to why perhaps the market has paused or why perhaps the market is reversed. And of course, in addition to that, you get all the other signals that come along with the related volume and price action. If I just pop the 5-minute open, for example, first of all, in fact, before I do that, I mean, one of the key components is I have the trend monitor on here, and as you can see, we are solid blue from 5, 10, 15, down to 30, and on the Renko, and over onto the 60-minute as well, which has also transitioned. And perhaps we will start down on the 60-minute. This was the price action from last night, but what strikes you immediately is the volatility indicator. Once again, it's triggered. It was a very sharp move lower, a ton of volume underneath, and then we've had the consolidation within the price action, which is what we expect to see. It doesn't always happen. There's never an always in trading. It's just the anticipation that this is possibly or probably what is likely to happen, and we just have to wait and see. But it just gives us an instant heads up that we've moved outside the average true range on this particular time frame, on the 60-minute on the hourly chart. And at that point, what would have happened would have been the indicator would have triggered, the little arrows would have appeared top and bottom, or the dots on MT5. They would have appeared in real time before the candle closed. And at that point, based on what's occurring with the volume also, you're very aware that the price action may, at the very least, move into a congestion phase and possibly reverse in the longer term, which is what we're seeing at the moment. And in addition to that, we've got the trend monitor, which is starting to transition back to a bullish phase also. And really, as you step back up through the time horizons, you look at things like, for example, where is the volume point of control? Well, at the moment, on the 5-minute, we go up to the 5-minute time frame. The volume point of control is in this region. We've had this nice rise. We've got the trend monitor, which is blue. There's a low volume node ahead, so we've got very little in the way of resistance ahead of us. What's going on in terms of volume? This is the London Open here. This is the European Open here. And this volume over here is all the Far East Asia. So this is almost always what we see, the pattern of volume. We see this this rise in volume as we move through into Europe, and then another step up as we move through into the UK market getting underway. So in terms of comparative, we can look at certainly London at Europe. We're not looking at London versus the Far East. We can certainly compare London with Europe, and for a comparison across the session, or certainly within the session, you're looking at this block of volume here. So anything in that sort of region is valid. And as you see this move higher, the first two candles that strike you, in fact the first three, the effort to rally is fine, but what we're seeing here is we're seeing some weakness appearing on the wick of the top of the candle. We've got another wick here, we've got a wick here. So this is not a terribly strong rally. We've got strong volume underneath it, but the market is a little bit resistance at the moment. And then we get to the one at the top, we get a little pivot form to the upside. We've got strong volume underneath, decent volume. It's aligned with everything else. But what's interesting about the next two candles is that minor weakness that we see here, that selling that was signaled in this rally here, that selling is also replicated on this candle. But what we're seeing at the moment in terms of the whether that volume is rising or falling, interestingly, it's fallen away on these last two candles here. So in a way, what that's signaling is that, yes, first of all, we expect to see some short-term weakness, certainly from these candles and this one, which we are seeing. But when we look at the volume profiles associated, it'd be interesting to see what happens with this candle when it closes on 5 minute. But certainly from these two candles here, the volume is not really following through. So what we're not seeing is we're not seeing a price action that's falling on rising volume, which would signal a strong move lower. So what we're seeing here is more likely a pause point developing, and we'll have to wait just for this candle to close and see what happens here. We've also got the pivot to the upside. We've got a pivot to the downside. What we may also see at this point is if we get another pivot to the upside, then we're moving into a congestion phase. So you put all that together, and really what you're trying to do in a move such as this is you're trying to establish whether, if you're holding for a bullish move higher, whether this piece of price action here is actually a true reversal in trend. And bear in mind, we are looking at just one chart here. We've been looking at the CSI, the matrix, all sorts of different things, different time horizons as well. But in just looking at this little piece of price action, we're just trying to establish whether we are looking at a full-blown reversal from bullish to bearish, or whether we are looking at just another of those inevitable pause points that come in all rallies, whether they're to the upside or the downside. And that's what we cover in great detail in the education program, which is really one of the key components is when you're in a primary trend, whether that's a primary trend in a 1 minute chart or a 1 month chart, is on the consequent pullback or reversal, which happens inevitably, is trying to establish through the prism of volume price analysis whether that is merely just a secondary trend or a tertiary, or whether it is actually a full-blown reversal from a primary trend higher into a primary trend lower, or vice versa. Because that aspect of price behavior really goes to the heart of trading, because if you can understand that and witness it in real time, it will help you to stay in a position and without getting bounced out all the time, because it goes to the heart of the mathematics of trading returns, because you can take a bunch of small losses, which is what it's all about. But if you can't take those bigger winners, then your trading account is always going to flatline. It may rise very, very slowly, or it may fall very, very slowly, but it's never going to move dramatically higher, because you're not offsetting those small losses with a handful of bigger winners which outweigh them. And really that's what trading is about. It is understanding whether the primary trend is coming to a pause point into a secondary and will then ultimately pick up to the primary again, or whether it's actually a primary reversal from one to the other. And really that's what it's a key aspect of trading, because it's the hardest thing to do in trading. It's one of the reasons we developed the trend monitor down here. We've got the trend dots as well. It's all these aspects. It's putting all these elements together to try to help you to figure out what is going on in this pause point. And it's really, that's the key to trading success. And we go down to the 30, for example, going back to what I was saying earlier about this whole business of using multiple time frames. You can see here we had the volatility. Did it trade inside on that occasion? No, it followed through on that occasion. Fine. As I say, there's no always in trading. It's just the anticipation that it might. We then get a consolidation within that candle. We've now got another one. What are we going to see here? Are we going to see consolidation within this candle? We've got a few more minutes to go. Looks as though we may do. So when you're looking at a 5 minute chart and you step down to the 30, it tells you why the market is in congestion. When you also look at this chart, it tells you something else. When you look at the price action over here, you've got some decent congestion to battle through here. Just very simple price congestion, eyeballing it. There's no, we're not looking at an indicator here. We're just looking at the price action. What do we have here? We had the rally. This was yesterday, and then into the Fed meeting and all the rest of it. So we've got, some minor resistance here. We've got some price congestion. And you're looking over here, so it's no surprise to see that we're congesting in this region. We've also got, on the volume point of control, a pretty strong region of volume associated with that level. It's what you expect to see. The volume point of control here is where the fulcrum of the market was. We've broken away from it. The volume here is representative of what's going on in terms of London, and of course it is distorted to some extent by this volume here, which was very heavy during the session last night. But nevertheless, it doesn't invalidate it. And as I've said many times before, you can step down to other time frames to isolate that out, or if it's far enough back over here, you just pull the whole thing across. I won't on this occasion because it just makes the candles huge. But you can isolate it out in that way, and then of course you'll see a more indicative volume profile down on the bottom here. But that's where we are at the moment. So we're trading in heavy volume in terms of the volume point of control. So we expect to see congestion anyway. We've got price resistance here. We've got price congestion, so we're expecting it there too. And all of that is just giving us a heads up as to help us with understanding as a scalping trader, why this market we've had the rally, but now we've moved into this pause point at this level. And you're down onto the other time frames. You see what's going on 10, what's going on 15. Let's pop the 15 up, see what's going on there. Okay, we've got a kind of doji candle. We've got a pivot to the upside, so we're starting to see, a little bit of price weakness come in there as well. But in terms of breaking through that level, similar picture. If we can get through that level, we've got a low volume node here immediately above. So if we can get through there on decent volume, then that's going to give us a great platform of support for the next leg up in the move. And that's without looking at anything else. We haven't been over onto the CSI. Let's just go and have a quick look at the currency strength indicator. Where are we? There we are, that one. Let's pull that up. So we're looking at the euro dollar at the moment. This is on 15. So we can see that selling of the dollar is continuing. We're diving down into oversold. The euro is heavily in overbought region. It's flatlining a little bit, which is why we're not seeing a strong trend at the moment. So if you're looking at that particular time horizon as your center line, if you will, your middle lane of a 3-lane highway where you've got faster time frames below and slower time frames above, then from that perspective, it's no surprise to see the euro pausing. And all we're seeing at the moment is any movement in the euro dollar is really being driven through the selling of the dollar, which is continuing. So in terms of looking at a chart where that trend is continuing, if you will, then what you'd see more clearly is that if this Aussie, the blue line, continues to rise, then certainly from a trend perspective at any rate, you'd see more of a movement on the Aussie dollar and also the New Zealand dollar, this grey line, which is also rising now. So clearly we're at a pause point. We've got 15-minute time horizon. The euro is very strongly overbought. The dollar is continuing to sell. And then it comes down to your chosen time frame, because if we go down to, let's just go down to the 5-minute, see what's going on there. You can see how strongly oversold the dollar is. And also you can start to see the euro, which is starting to weaken a little bit. It's coming out of this overbought region on 5, and it's starting to sell off a little bit. And of course, that really just encapsulates the whole business of trading and your chosen time frames, because what's occurring in one time frame for one trader as a bullish opportunity, for a slower term trader, that may be a bearish opportunity. It's all wheels within wheels. All price action is self-similar. It's just a question of choosing your particular chosen time frame and taking the trading opportunity, because rest assured, whatever it is, whatever position you've taken in your time frame, a trader will have taken an opposite position in a different time frame. Both of you can make money. It's just you have different perspectives in terms of time. Just going to pass back to Anna there for a moment. Just going to transfer back to the MT5 now.
It's actually a really good time for David to pass over, because a lot of the things that he has said overlap on what I was going to pick up. And also I've got the New Zealand CAD, and if you've been coming along regularly, you will know we've been looking at the New Zealand Canadian, and I've been writing about it on the various Facebook pages that we have. And if you look at the screenshots of the currency heat map from the last 3 or 4 weeks, isn't it, David? We've been looking at the New Zealand CAD in particular, as it's here now at spot 7. It was been relentlessly at taking the top spot. And with regard to the heat map, the way it works, it's very, very straightforward. It ranks the 28 pairs that most traders consider when trading, and as I said, just ranks them. And as a reversal trader, looking for a new trend to start, we tend to look at the extremes. We look at the ones at the top and the ones at the bottom, because eventually they are going to roll over. This is a market primarily of mean reversion. And as I said, the New Zealand CAD has been, as I said, taken top spot for some considerable time, but now it is at spot 7. I'll just move that over there so we can see it. Now, I just want to show this thing go back to the price cycle and what you see in one time frame, how that actually compares with a slower time frame, and comes and also answers one of the questions that we've been sent, and that is, when you look at a price cycle in one time frame. I just happen to have the daily, but it could be anything, and we're looking at what could potentially be a distribution. A distribution phase comes at the end of where you've had a really strong run up. This is the daily chart for the New Zealand CAD, very much reflecting the strength of the move higher in this pair. This is also historically has been assisted by the fall that we've seen in oil, because it's got the Canadian in the pair. And we can see here, it's had we've got the levels very clearly marked out where it has paused. We have a shooting star, and then we have another one. We looked at the volume, we looked at the attempt to rise, and then the pullback. But generally speaking, during this phase of price action, it was still very much at the top of the heat map. Now, this is a price cycle in one time frame. And the issue that you have to address as a trader is that you can become, I wouldn't say obsessed, but you can see something in one time frame and you're waiting for it to develop, and then it doesn't develop, and you think, oh, this looks like to be a distribution. It has actually the rollover has happened. We've got a 2-bar reversal here, but now we've got a little candle being formed at the moment. It looks like a doji, and you can see this wick to the bottom of this candle, because in the faster time frame, the New Zealand is actually being bought. But we're going to stick to the slower time. I'm going to look at the daily, the weekly, and the monthly, but it could be any time frame. So we've been looking at the daily chart, and we've been waiting for this rollover, assisted by the heat map, because we know it's oversold, overbought in this particular time frame. But look at the time that it has taken for the distribution phase, if you like, to develop. Time is something you also have to factor in to the to how long something is going to take to happen. Now, obviously, on a daily time frame, it's going to take much longer than it's going to take on a 5 or a 15 or on a faster time frame. The principles are the same. You have to look at the price cycle. It moves in its own universe. It moves in its own time, if you like, in the time frame under consideration. But at the back of your mind, you also have to consider that and put it in the context of what is happening in a slower time frame. And this is such a perfect example, the New Zealand Canadian, because we've got the daily. Well, if we go to the weekly, that kind of confirms what we can see on the daily, because if we go right back here, back to the end of September, we had this move lower, then we had this 2-bar reversals, 2-bar reversals in forex. I don't know what it is about 2-bar reversals in forex, but they really work really well, don't they, David? They're if there were candle combinations that you wanted to sort of keep an eye on and look at and consider closely is do look at 2-bar reversals. Obviously, there's shooting stars and hammer candles. And if we move right back here, you've got another really nice 2-bar reversal here. For whatever reason, the 2-bar reversal in forex, it does appear to produce good strong moves, as it were. But looking on at the daily, the weekly chart, we can see here we've got actually 3 solid weeks where prices attempted to rise, fallen back, attempted to rise, fallen back. So it is actually confirming, if you like, validating what we can see on the daily chart. But when we move up to the monthly chart here, actually what we're seeing is the move higher for this pair. We go right back to, if we've got September, beginning of September here, was precipitated, if you like, by this very deep hammer candle that we have here. Then we had this massive move higher on this very widespread up candle. And so you could argue that if the monthly chart were your was the time scale that you were looking at, a month, and you're looking months ahead. What we're seeing down below in the daily chart, that sort of distribution phase, is actually really it could just be a pullback in this very, very strong move higher. It doesn't invalidate the fact that we are in a distribution on the faster time frame. It's just the context of that distribution vis-a-vis what is happening in a slower time frame. So what you have to hold in your head, and it can be difficult, is you're looking at the price cycle on its own merits, in its own universe, in one time frame, but you have to, if you like, put it into context of what is happening on a slower time frame. And obviously sometimes what is happening in a faster time frame, because if you are a faster time trader, you're on the minutes, as it were, rather than these longer time, time frames. That doesn't invalidate it either as well, which is what makes trading so complex. Fascinating, but complex. It's not complicated, it's just complex. And our brains sometimes are not very good at handling complexity. The brain likes things easy. It likes, it doesn't like to come out of its comfort zone. It's there to protect you. The question is, why do you want to do that? Why do you want to push yourself out of your comfort zone? And if you find it difficult to come out of your comfort zone, not just in trading, but in your other aspects of your life, then you are going to struggle. You have to be willing to come out of your comfort zone. You have to be willing to put your ego aside. You have to be willing to take a risk, not just a financial risk, but a risk that you are going to be wrong. And most times in trading, you are wrong, but it doesn't matter. As long as you are happy to accept that and say, yep, I know it's uncertain. I know it's, I could be wrong, but I'm willing to go ahead and give it a go. Now, going back to the faster time frames, as we said, we looked at the daily chart. We can see that wick to the bottom of the candle. And really that move has been precipitated, as I said, away from the volume point of control. The volume point of control is a hugely important area of your chart. It's the fulcrum of the chart. It's where the market is, hasn't really decided which way it's going to go. It is going to go one way or the other, but at the moment it doesn't. And when the move starts, and it's, again, we get to this validation point where you want to see rising prices, rising volume, then you know the move is going to continue higher. And what's interesting on this 3-minute chart is we've had this big up candle here with a lot of volume underneath it, not quite as much as this one over here, and I wouldn't say it is kind of anomalous in the sense that the spread of that, the range of that candle doesn't really kind of justify the volume that's underneath it, which is like, it's an anomaly. It's a kind of a short-term signal to say, hey, we've had this nice move higher, but it doesn't look quite right. But what's also interesting, because anomalies happen on the down as well as as an up move, is we've had the pullback, but the volume isn't very strong. And now we're seeing a candle coming in. But again, that needs to be substantially higher if this is actually going to go lower, or is it just simply a minor pullback and the move higher is going to continue. And the way we track this, going back to the non-time based chart, as we can see here with the Renko, it kind of takes away the noise that we are seeing in these two candles, and we can see the trend monitor, as I said, resolutely blue. Really, it's just a little blip in the Renko at the moment. Let's just have a quick look at the where am I on CSI? That's the daily one. I just wanted to show the daily, going back to the longer term charts. This was the overextension, as we could see here on the New Zealand dollar, that we had the initial fall. This represents every time it tried to fall, and then it rallied, it fell, then a minor rally, and now it looks to be in a strong move lower, probably against the pound. I haven't looked at the pound New Zealand because we were looking at the New Zealand CAD. But if I go down to the faster time frame, let's go down to the 6 minute or something. Where's my 6 minute gone? Can't find it. Here it is. There we are. We can see. Yes, we can see actually the New Zealand does look to be rising, continue to rise. The Canadian continuing to fall. Let's have a look how that's represented on the Renko. And there we are. The Renko has actually kept us in. It gets us in, it keeps us in, and actually helps us to get out. And if we look at the time-based chart, where were we? 3 minute. Here we are. That was that candle. As I said, the volume underneath it wasn't fantastic. That was an anomaly because the range of that candle was, you know, really not in agreement, if you like, with the volume underneath it. Nice lot of volume, but look at that volume under that candle. Then we had this one. I said, yeah, doesn't look fantastic. That's actually now turned into buying. Not a huge amount, but it's still got a wick to the bottom of the candle, and now it looks like it wants to carry on higher. But we have support and resistance comes in. I've got a fractal up here. You know, that's the level it's now got to go through for it to move, to carry on up. But the Renko is what you would use in these faster time frames where you have a lot of noise, a lot of candles all coming out really, really quickly. The Renko will there to smooth it out to some extent. But again, the support and resistance levels are painted for you. We have this hatch line here. There isn't one that's come up here yet. We'll just wait and see. But it's clear from the candle itself. What's the high? It's 91.08. That's what it's got to get through if it's going to carry on higher. Where is it going? Well, on the Renko, what have we got? We've got 91.23. You just move up a time frame. Let's have a look. I've got the 20. Let's move it down to maybe the 10, the 20, or let's have the 12. Let's have a look at the 12 minute there. Yeah, it's still wanting to move higher. And what's interesting on this one is it's coming up to a low volume node on the VPOC histogram, and that's really good news, because when price reaches what we call low volume nodes, either to the upside or downside, then you know you're going to get a degree of momentum. It's going to go through there fairly quickly. The other side of that is it possibly may trigger a volatility candle. So what the VPOC does, it also gives you a sense of momentum, speed. With speed and momentum possibly comes volatility. You know what's going to happen with volatility, but you know it takes away a degree of the uncertainty that this business, you know, it's just part and parcel of trading. Anything you want to say about that, David, or move?
Actually, it's replicated what's going on.
Oh, do you want
to? Just to highlight a couple of the indicators, as Anna was changing around through time frames, you would have seen the trend monitor. In some time frames it hadn't transitioned, in others it had. Here you clearly see the transition from the red bearish through a transitional color of darker blue and ultimately through into the brighter blue of the bullish trend. But in combination with that, you've also got the trend dots, and as I've said before, they are two great indicators to use in tandem, because what happens is the trend dots will change first, the trend monitor will move second. So what the trend dots are doing is giving you a very close perspective on price action as they transition from red into a congestion color of gray, or your chosen color, and then ultimately through out and into the bullish blue. The trend monitor, as you can see there, that changes at a slower speed. So the trend dots will always transition first, and then the trend monitor will follow. And it comes back to what I was saying earlier about this whole business of trying to either get you into a trend or helping to keep you in a trend. Even when you're in a trend, the trend dots will change first. They will change from red to blue or blue to red, depending on the direction. And the trend monitor, it takes a slower perspective view of the trend. So what it's trying to do is to really gauge whether that trend has actually transitioned from a primary to a primary. In this case, we're on a 12-minute time frame. Or is it simply a question of a pause point? Because what you'll see on a pause point is you will see the trend monitor, it will transition to a darker color, but ultimately never makes it through to the brighter blue or the brighter red, depending on which way the trend is going, to signal to you that that is actually a change in a primary and not simply a secondary pause point in the longer term trend. And when I talk about longer term trends, it doesn't matter whether it's a 1 minute or a 1 month. The principles are exactly the same. Let me just hop over back onto the Ninja platform, because I've got the euro dollar up here, and it's just reaching a fascinating stage as well, and it also highlights all the things that Alan was talking about as well. So it's just we'll just flip over if we can.
Okay, I'll do that. I'm just going to say one more thing.
Okay, I'm just going to switch off for a moment.
And finally, just to add to what we were saying, what you see in the price cycle in one time frame, which could be completely contra to what is in another time frame. Does that validate taking a trade? And the answer is, the short answer is yes. But it depends. It depends how long you want to stay in that trade. Often traders like to say, well, I want to see every time frame lining up in the direction that I want to take the trade. Well, you know, that's just not going to happen. Somewhere along the line, you are going to be trading counter to what is happening in another time frame. So, as I said, time is just something that you really have to get to grips with on many different levels. Now, I'm just going to pass back to David on is it euro dollar you've got there?
Yeah.
Okay. And as I said, but if you've got any questions on what we said, please just drop them into the chat box.
Just switching back screens, back to where we were before. There we go, there's the euro dollar up again. Same chart layout as before. And really, it just does reinforce the point. If we go down to, this was the 5 minute we were looking at earlier, and we were trying to establish whether this was going to be a change in primary trend or whether it was just a pause point. And as we expected, purely based on the selling pressure that was coming in on these candles, it looked weak. There was no follow through. There was no falling price and rising volume. So we were correct in our analysis, because think of it this way: if you were now looking at this, just move the chat box out of the way. Supposing, for example, that you closed out here because you were nervous, maybe you pocketed, I don't know, 5, 6, 10 pips maybe, and you saw this congestion phase, and you've closed out, and you thought, great, okay, well, I've made 10 pips, that's great, I've good morning's work, and we'll go and find something else. And then this occurs. We're now looking at 30 pips and rising. Having said that, the caveat now is we've got the volatility being triggered. So if you're sitting in this position, then you've got a decision to make. Do you want to bank what you've got, or are you going to sit through this on the expectation of possibly congestion, or possibly even furthermore a reversal? But going back to my initial point is this: if you're seeing this rally now and you've closed out maybe taking 10, and you're now looking at another 30 pips that you've just missed by sitting in this for 5, 6, 7 minutes, whatever it is, you're going to be suffering trader regret right now, and you're going to be thinking, I wish I'd stayed in, I should have stayed in, I got frightened out. And really, that price chart alone just encapsulates what trading is about. It's the essence of trading, sitting through a congestion phase, trying to analyze it in the context of what it is, and thereafter, can I hold this position? Am I comfortable holding this position to try and maximize whatever it is I'm trying to take out of the market right now? And really, I couldn't find a better example than that. So we're now sitting in some nice profit, and the question we've got to decide for ourselves is, having seen this, do we close out? To be honest with you, if I was sitting in this, I would, purely because if it breaks through this level here and on up, then you can always jump back in again. It's no big deal. So do I want to sit through the pain of seeing possible congestion longer term? The answer is probably no. So at this point, I would have closed out, taken my profit off the table, be looking at something else possibly, and heading off to another opportunity. And to drop down onto the Renko, that again, it really does sum up everything to do with using a non-time-based approach, a blend with the time-based charts. And the beauty of the Renko is this is currently running at 24. And what the Renko optimizer does on NinjaTrader, and in a similar way on the MT4, MT5 platform, it actually delivers the optimal setting for you. See, there's no guesswork here. On NinjaTrader, you just simply select whatever time frame. I've got 1 minute here. And the indicator will deliver the optimal setting for that particular currency pair or instrument, whatever, or whatever future, whatever it is you're trading. It will deliver the optimal setting for that particular point in the session, because this changes the whole time. You can't sit here through a whole session and say, well, I'm only going to trade a 2 pip. This is 224, but it's actually 2.4 pips. It's just the way Renko does it. So you're looking at brick sizes of 2.4 pips here. Now, you might set this up because you might have not a clue of how to set the brick size. You may think, well, I like a 2 brick or a 3 brick or a 4 brick, whatever it is. That varies from pair to pair. It will depend on the volatility of that particular pair. It will depend on the session time frame or the period of the session you're trading. As you can appreciate, all those things change throughout a session, whether the US markets are trading in the Far East, are we trading 3 centers, what are we doing? And that's what the indicator does. It delivers the optimal setting, so you are trading at the correct brick size for that particular pair at that particular time. And in addition to that, as you can see, we've got the trend dots on here working beautifully. We've got the support and resistance here in terms of accumulation distribution levels. So as we break through these, these become stronger. These solid lines down here are weaker, where you've got these very narrow lines. And on MT4 and MT5, it's the solid lines and the dash lines, which work in a very similar way. And then obviously you've got the trend monitor down here supporting. And as you can see here, we went into this phase of congestion, which we saw on the time-based charts. We had pivots in exactly the same way. As I said earlier, the trend dots have transitioned here. They've gone into red, but look at the trend monitor. It's sitting in darker blue. It never got to darker red or even any further than that, and we're back into blue again. And that's really what it's all about. It's about holding it. The other thing you can also do with many of the indicators, and I have done this on the trend monitor, is you can actually adjust the sensitivity. So if you want to smooth out those congestion periods and really just pick up on the trends, you can adjust the sensitivity. It's like a volume control, so you can increase that or decrease it. It's a personal preference. You adjust it to your trading preferences and your attitude to risk and how you want to view it. If we look across the time frames, go out to the 10-minute, what have we got? Same sort of thing there. We've got volatility triggered, decent volume under that, it's high volume. Remember, this is all being compressed by this volume over here. So if we expand this over, there we go. That really does highlight the volume that's contained within that candle. So a big surge in price and the volatility has been triggered. We've got exactly the same on 15. So another signal on 15. What's happening on 30? There we go. The volatility has been triggered and the candle hasn't closed yet. As I said before, this indicator will trigger before the candle closes. So once the price action has moved outside the average true range, which is, as it says, as it sounds, is as an average, the expectation of price action within that particular time frame, then it will trigger. So we know we're in a volatile state of price action right now. You're seeing that reflected on the Renko, and as we can see down on the 60, we've broken through this region of what was acting as price resistance, if you like, and we're moving up into a low volume region on the hourly chart there. Had I closed out here, what are we seeing? Do I have any trader regret? Have I taken my money off the table? No, not particularly, because I've banked a nice profit. I'm now waiting for things to develop. And if the next candle closes above this, that's fine. I can always jump back in, provided the volume is telling me to do so. What you can also see here under this candle, we've got a ton of volume under this candle, this next one, which moved into the spread of this one. So there is some weakness in there. There's high volume. You've got price action that's trying to rally, lots of selling going on in that candle. We might see a repeat of this, but if we see a follow through with supportive volume and no further anomalies, that's fine. You know, I'm cool with that. We just jump back in again. The Renko's keeping us in. You know, it's a personal decision. As I say, from my perspective, if I was trading this, I would have closed out and I'd now be sitting there thinking, okay, do I want to get back into this move? Be looking at all the other aspects. You'd be looking at the currency strength indicator, what's going on across the matrix, what's driving this also. Is this euro buying coupled with dollar selling, or is it purely dollar selling that's driving the move? So you've got to figure all that out using all the indicators. You use the currency matrix, use the currency array. Let's just head over and have a quick look. Drop down to, there we go. That's on the currency strength. There we go. So we're on 5 minute here. So what are we seeing is driving this at the moment? Well, I would say of the two, it's very much more euro buying that's driving it than the dollar selling, because the dollar selling has actually dried up a little bit. It's flatlining down in the oversold region. So it's very much euro buying. Doesn't matter why it's euro buying. Could be fundamental, could be someone said something, could be something to do with Brexit. Goodness knows, 26 different reasons. Don't really care. It's the fact we're seeing strong euro buying. We go up onto 15. What are we seeing there? Still staying up here. We're up into overbought and moving even deeper into overbought. There we're seeing selling on the dollar. So, you know, that is continuing. But at some point, that is going to reverse. If we're looking at other opportunities now, we're looking at the Aussie rising very strongly. We're looking at New Zealand dollars rising very strongly. And, you know, looking at that from the other perspective, you've got the yen here, which is selling very strongly. So, you know, there are so many opportunities here. You're spoiled for choice. Let's just have a quick look at the currency array on, let's just flick that off. There we go on the dollar. So let's click that back again. There we go. This is our euro dollar, very strong trend. You can see it rising very strongly. A lot of dollar selling, particularly against the Swiss. You've got dollar selling against the yen. New Zealand dollar is a little bit flat, but you know, it's all sort of aligning in that direction where we're seeing pretty much universal dollar selling for the time being. And then you're down onto the matrix in your chosen time frames. Put that on 15. Let's isolate out the dollar there. Got New Zealand dollar up at the top, Aussie dollars joining it. Euro dollar isn't actually the strongest. It's actually the Aussie and the New Zealand. Down at the bottom here, we've got dollar Swiss and selling on the dollar CAD as well. So you put it all together, and it's just, that is the way that you approach trading, and all of that you would just do within your chosen time window, your time frame. Are you a scalper? Are you on the 1-5-15? Are you more of a swing and trend? Are you on 15-30 in the hourly? Or are you looking for a longer term trend? You're looking at the 4-hour, daily, weekly, whatever it may be. The principles are exactly the same. Passing back to Anna.
And while David was just talking through the euro dollar, I've still got the New Zealand Canadian up here on my profile, and we can see here the Renko. This is the little, just move that out of the way. I can't see what I'm doing. This is the little pullback that we've seen here. The trend dots haven't changed color. We have, the pivot has actually come up, which also tells us that to expect, the expectation, it's all about anticipation and expectation. When we see something triggered, when we see a price, we see a candle volume combination, what is the expectation? What can we anticipate is likely to happen? And it's the same with indicator. The indicator, you know, it tells us what is likely to happen next. And as I said, this is an uncertain world that we are operating in, even more uncertain than life generally. And it's just nice to have these little signposts, if you like, just to help us. And really, all we are looking to do is to keep our brains calm. We have to be in a kind of neutral emotional state so that we can deal with what we are seeing on the screens, because as I said, the way we're wired, the way our brain operates, it is the exact opposite. It's there to protect you, and it's there. It's always in, in this heightened awareness state where it's either freeze, flight, or freeze. Was it fight, flight, or freeze? It's actually the three Fs. So it's quite interesting now with New Zealand Canadian. We'll see if it actually moves into a little perhaps a little congestion phase before moving higher. And just to look at the time chart, we've got the levels quite clearly marked, defined, where it's got to go through if it is going to carry on higher. So this is what we're here. We've got what have we got here? We've got 91 to the bottom, and we've got the stronger line here. And on the support and resistance indicator, where you have a solid line, it simply means that the support or resistance line is stronger rather than the sort of hatch line. It's mean price has tested it and it has held. And if it tests it again, it's not going to go through very, very quickly. But obviously the resistance at the top is 91.10. It's only 10 pips. But as I said, it depends. It's all relative to the time frame that you are trading. As I said, what the Renko does, it's simply nothing has changed. We've got the levels defined. We will wait and see. What's the 12 minutes say? We've got this little 2-bar reversal here. Is that going to kick in? Again, just have to wait and see. There's a lot of volume under that, but there was we have a wick to the bottom of the candle. You can see the volume. There's obviously buying coming in here as well. And if we go right up to the not right up, let's go to the 20-minute chart here. We can see here it's actually hit a significant level on the Camarilla. We have the on the previous candle, we had the wick to the top of the candle, so we were expecting weakness. Even just candle analysis, if you just looking at candles on their own, candles with wicks, you will know when to expect weakness or additional buying on a red candle. If you have a red candle with a wick to the bottom, you know there is buying in that candle. And if it's supported by volume, even better. So it's a really interesting. The New Zealand CAD is at a really interesting point. But as I said, go right back to what I said. This is all based on, go back to the daily. What are we seeing? How did this price cycle that we saw on the daily, how did it compare with what was going on the slower time frames? We looked at the weekly and the monthly, and now we're right down at the other end of the scale where we're looking at the shorter time frame. And as David says, two traders looking at different time frames, one will go long, one will go short, and they will both be successful. And the only difference will be how long they're likely to stay in the trade and the risk on that trade. And that is only something you can decide for yourself. Nothing to do with risk and reward in terms of monetary. It's really the risk of the trade itself. But if you look at it through the prism of the price cycle, whether that price cycle on the time frame that you're considering, is it very much against the run of play in another time frame? Are you willing to take you're willing to enter? If the signals say so, then that is going to be very much up to you. Is there anything else you want to add to that, or is that it? No, that's it. Fine. We're going to stop there very quickly. Just come up to those of you who perhaps not come along before. On the quantum indicators, you'll find all the details at quantumtrading.com. There are pages on both NinjaTrader and MT4, MT5. There's all sorts of, there's lists of indicators, and they've all got videos, support pages to explain in detail how they were developed, how you can use them, how you can integrate them into your own trading, because the purpose of why we've developed these is really, for you to take them, blend them into what you're doing, blend them into volume price analysis, and you can just start with one. You can buy, we have bundled deals, or you can buy the complete package, and the complete package on MT4 is actually 894, and you can pay outright, or you can have it spread over a 3-month period on the EPP. But I think one of the most important thing, and I know the most important thing about the package is whenever we develop new indicators, they are automatically added to your package. So if whenever you buy the package and there is this list of indicators, if we develop 1, 2, 3, 4 in the future, they will automatically be added. You never actually pay us any more money, and you certainly don't pay us for any upgrades to the indicators. The NinjaTrader is slightly more expensive because we have different indicators for the platform. And with regard to the program, you can discover more about the program here at Quantum Trading Education. That's David and myself. We're not here at the moment. This is where we have actually two trading centers, and these are the volumes. These are the modules that form part of the program. I think if there's criticism about the program, there is an awful lot of content to absorb, but it's content that is there for you for life. You know, so in terms of how long it'll take you to work through the content, depends on how much time you have available, obviously, but you know, it's going to take you, I would say, a minimum of 6 months, David. 6 months, a year.
Yeah, 3 to 6.
Pretty much so. There are, you know, there are a lot of videos, there are PDFs, and the program also does include the indicators, the full package of indicators. So for MT4, MT5, the cost then goes to 1391, and for NinjaTrader it's 1694. But again, you can spread the payments over a 3-month period. Is there anything you want to add to that? No, that's it. That's it. And finally, if you want more information, you can either drop me an email, anna@annacoolan.com, or david@quantumtrading.com. So it's the final webinar of the year. So we are back the first week. When are we back, David? First week in January. The first Thursday. I think we're back the first Thursday in the new year. So all it remains for me to say is to wish you all a very happy Christmas and New Year. I hope, you know, spend lots of time with your family and friends, and we will be back in 2019.